This is the Investor Connect podcast program. I'm Hall T. Martin. I'm the host of this show in which we interview angel investors, venture capital, family offices, private equity, and many other investors for early stage and growth companies. I hope you enjoy this episode. Well, hello, this is Hall Martin with Investor Connect. Today we're here with Shawn Flynn, head of Incubation, managing director of business development at TechCode Accelerator, and host of the Silicon Valley podcast. Shawn, thank you for joining us.
Hall, thank you for allowing me to be on your show again. I had a great time the first time, and I know today is going to be just as fun.
Well, that's great. Well, can you give us a short update about yourself and what you've been doing since our last interview?
Okay, so the fun part is I am traveling across the U.S. Right now, I'm actually closer to Hall. I'm in Colorado, whereas last time we talked, I was in San Francisco, which is now on fire, or at least the surrounding area. But a lot has happened since the last time we've talked. A lot of the companies that we were working with, some of them have not been able to move forward during this time with COVID, raising their next rounds. Some of the companies, a lot of the people in Silicon Valley, I'm not sure how aware your audience is, but there is a big exodus. There's a lot of people fleeing to areas of the country where it's cheaper to live. They have family. There's a lot of reasons. We could talk about that as well. It's just the whole ecosystem of Silicon Valley. I'd say since the last time we talked, which was, I think, probably 8-9 months ago, maybe even a little bit longer, a lot has changed. And there's a lot of discussion of what the new Valley will look like moving forward. I mean, just in the news the other day was Pinterest spending $90 million to get out of a lease of their location in San Francisco. You hear something like that. You hear Google telling employees that they don't have to come back till mid next year. And even then, a lot of those employees, it's optional. And I mean, what does that do to the city of Mountain View and all these cities around that were preparing for this huge expansion? And the service workers that are working at these companies, and Twitter saying that their employees can indefinitely work at home. When you're talking these giants that play such a huge part, I mean, some of these companies are as big as the economy of some countries. Now reimagining their workforce environment and how's that going to affect all of Silicon Valley? So it's a very interesting time when these engineers that are getting paid six figures are now saying, hey, I don't need to live in the Valley. I can go someplace else and maybe start my side project there and, in these other markets. So it's very interesting, everything that's going on right now.
Well, do you think that change will continue after the pandemic is over and after the vaccine is out? Do you think people will cluster back into the cities like New York and San Francisco? Or do you think this is a permanent change? People are going to live and work wherever they want and do whatever they want, and the remote work thing will be a permanent aspect of business?
I'm not really sure. So, I mean, when you're young, when you're not married, you probably want to be in the city. There's more action going on there. There's more interacting with people. You get to basically, have better chances of doing what you want to do. But then once you get married, you want to settle down and have a backyard. That's not going to happen. I mean, right now, in the last 6 months, almost every other week, a close contact of mine has left the Bay Area for the suburbs. And the reason for it is they all say, it's time to raise a family and I want a backyard. So these people are just leaving Silicon Valley, where your rent is, what you can get a house for easily someplace else in the U.S. with a 5-bedroom house, 4-bathroom backyard. So people are really questioning that, how important it is to live in Silicon Valley, how important it is to spend all this money on your rent to live in a small studio where you can be other places in the country or even the world and have a backyard with a pool and a dog.
But I believe I heard some of the companies in Silicon Valley were not going to pay the same rate if you did not live in downtown San Francisco or San Jose or Palo Alto. You were living in a lower cost place. You might be ending up with a lower cost compensation plan because your cost of living is different. Is that the way that works?
Yeah, I mean, that's what they're talking about now. But at the same time, in their mind, I think it is that they're thinking we are now that location's not as important, we're going to have all this abundant access to these engineers and people that we can choose to hire and employ, where that might not be as big as they're thinking. I mean, right now they have to pay so much because of supply and demand. I mean, they know they need to get the top engineers out there to get their product out there, to get product market share and that. But what people don't realize is engineers in Silicon Valley, they're battle tested. And what I mean by that is they're going from one startup to another startup to another startup. So you have these people that have had 5-10 years experience of every 6 to 8 months going to a new startup and what that grind is. To find people with that experience and that know-how, other places in the world, they're just not there. So maybe right now, if I'm HR thinking, okay, if people can work in Florida, work in these other places, I won't have to pay them as much, but they'll still want to work with me. In reality, what might happen is these people move to Florida and just still demand the same salary because they still can push the same amount of work and they're still in as high a demand. And actually, they might actually be in more demand because now they're going to be recruited by people outside of their geographic area. Whereas before, recruiters or headhunters are thinking, okay, if I recruit this person from here and they have to relocate, I have to pay them for relocation fees and all that. So I can only recruit from the small pool. Now you have those same engineers being recruited by even more. So I know right now there is that talk of, oh, right, we can pay them less if they work from home or remote. But that might not always be the case. And we'll see what happens in the coming year or two about that as this option becomes more available.
Well, that's great. So since we last talked, we've had COVID come up and make major changes to the startup scene. What are you seeing out there that's changed since we talked last as far as just the way we do work and impact of COVID on healthcare, ed tech, and other aspects of our lives?
Oh, God. So that question right there, that's a 3-part interview question. I mean, so much has happened with companies pivoting, with investors making choices different. I mean, I just heard of a company the other day raised their C round without ever meeting face-to-face 3 of the investors. And this, I think they raised, was it 36 million? Was that round? So, I mean, imagine that. I had a conversation with an investor that mostly focuses on fintech in Hong Kong. They've done quite a few investments, all virtual. And the reason behind that is they know that right now what they're seeing is there's all these companies using legacy systems that they know themselves are going to be disruptive if they don't implement new technology. And whereas before, I mean, they had those processes in place, they didn't feel the urge to update. Now, with so much back paperwork, with so few people being able to go to the office, with the whole organization chart being disrupted, they're now saying, okay, I have to implement some of this technology or we might not survive COVID. So we're seeing some companies in the fintech space wanting to adopt technology. With that, investors are hearing it. They want to put money in these investments to move their portfolio companies forward with their contacts. So in some areas that weren't getting attention before are getting a lot more now. Others that were getting attention before, I mean, we're not hearing so much. I have had some conversations with startups saying in one area, it's hard to get those intros to businesses like we were before. They're not taking new meetings. And then I have others that are telling me, oh my God, these businesses that it would take months to get a phone call with are reaching out to us because our product is COVID related. So it's really, really been a huge shift in such a short time. But I think the main thing is a lot of companies are basically pushing what they would have normally do in 5 years into a few months when it comes to adoption of technology.
Oh, wow. That's great. It sounds like things are moving forward fast in some parts of the economy. One of the things I saw in the U.S. going through lockdown was the fragility of the supply chain, and manufacturing was spread abroad. It was hard to get some things manufactured because everything was interconnected with other countries, that some were working and some were not. Where do you think manufacturing is going to go in the future? What changes do you think we'll see there?
So that's probably one of the most interesting things that I've had a conversation on. I've had 2 conversations with factories so a little bit more about my background for people that didn't listen to the first interview. The company I'm at, our headquarters in Beijing. We do a lot of interaction between China, mainland China and the U.S. with helping companies set up facilities and that. But with that, we have strong connections in China. And I've actually had 2 conversations with manufacturers there. One was with PPE equipment. Another was not, but both of them were interested in setting up a manufacturer in the U.S., which I have not had this conversation before because you can imagine how much more costly it is to do manufacturing here with our regulations, with our minimum wage, with our environmental laws and everything else that plays a part in creating a product. But they are worried that if they don't do something now, they're going to miss out on opportunities in the future. They don't know what the future environment looks like for trade, for distribution. And they want to get here first. They want to build a brand here in the US. They want to have a local presence because they feel that they're going to get priority for orders from potential government contracts or potential corporations that may only want to do business with things manufactured in the US. They're worried that, basically that they're worried that this market could be cut off to them in some areas if they're not already here. So, their questions were setting up manufacturing in the US, setting up manufacturing in Mexico, what our experience was with that. We kind of told them from what our research has been with Mexico and that environment and the US, nothing has been inked or signed to move forward, but having those conversations, this was the first time ever.
Right. That's a very interesting move. I would not have thought that. I thought there would have been immigration or cultural or other laws that would have made that difficult. But the U.S. is a big market. There's a lot of need for manufacturing. There's a lot of interest in bringing it back to the U.S. for U.S. labor. So it seems like that's an opportunity for the China companies, which have the skills and expertise to do that. So I think we'll see a lot more of that coming up as well. Do you think any political things might block that down the way, or tariff things might make that difficult?
Well, actually, the political things are kind of why they're interested in doing it. Is they think that in the conversations I had, they think that there's going to be more regulations, more tariffs, more political stigma not to work with them or get products from that area. As we've seen with PPE equipment, there's been countless stories of people ordering PPE equipment from overseas, and when it arrives, there's holes. It wasn't what they ordered. The quality wasn't there. They were mislabeled. And people don't want to do that. People, government, hospitals, they want stuff local. And these manufacturers overseas realize that they have to be local to get those orders. And these orders are so big that in their mind, it's worth it. It's worth it setting up a new operation. It's worth it setting up and creating a new brand here in the US for these potential customers. And the fear is if they don't do it, someone else will, and they're going to miss out on the market.
I gotcha. Well, you also, since the pandemic hit, we saw, or during pandemic, we saw the cannabis market be deemed an essential service. And looking at that space, I believe it went from 22% growth rate to almost doubling, almost 40% growth rate. It was deemed useful by the powers that be. And so it just seems like there's a lot that's going on with cannabis. What do you see out there in that space?
No, I'm definitely seeing that. I've had a couple conversations with people that have actually thought that, and this is just speculation. I haven't actually talked to any congressperson or anything like that, but just people saying, okay, what's going to happen in the future with all this money that the governments owe? How are they going to collect taxes? How are they going to get this new revenue in? And from what has happened in the past in Colorado, Oregon, legalizing cannabis at the municipal and the recreational level has seen a huge increase in tax revenue for the states, for local municipalities. So there is thought that, well, depending on who's elected, this might get pushed really fast. And even if someone else is elected, it might be a slower process, but still pushed because of the money that the states are going to need to raise. Just think about it. Right now, in many areas, the housing prices are going down. A lot of government revenue is based on taxes on the home prices. You have, just shutdowns everywhere where these tax revenues for these local cities, and they're not cutting the staff. They're not cutting what they have to not be in bankruptcy, more or less. So it's going to be really interesting what's going to happen. I'd say 2021, with cities, states, and as they come up with new ideas to try to keep the doors open, the lights on for them.
Well, that's great. I think pre-COVID, the rules I said that legalization would be complete across the U.S. in the year 2025 to 2030, somewhere along there, because each state's doing it at their own rate and in their own way. And it didn't seem like there was interest at the federal level just to move it all in one go. But with the need for tax revenue and the jobs that might come with it, how much do you think that's going to accelerate it? When do you think we might see full legalization? Probably sooner than 2025, but what's your take?
I would think sooner than 2025. For statewide, I could see almost every state trying to legalize this in the next year or two by 2022. Federal, I mean, really, it really kind of depends on this next election, I guess, whether it's really soon or, pushed towards the end. I have no idea. I mean, Martin, where you are in Texas, it might be the last state to hold out, but
California's made $1 billion in tax revenue in the last 2 years, so I think that's going to start looking pretty okay. I find the stigma with cannabis is pretty much gone at this point. It's really there's no stigma to it anymore. I mean, there are issues with how do you roll it out and how do you manage it and how do you do control, and the financial issues with banking seems to be the biggest barrier, trying to get that sorted out so people can actually deal with standard banks and put money into national banks that cross the state lines, because that's a real showstopper for a lot of groups. You hear people putting all the money in their trunk of their car because the bank won't take it. And, they have to kind of sort those kind of issues have to be sorted out before you can really have a truly, universal use of it. But I agree. I think the amount of money coming out of it is going to be too compelling to pass up and by anybody.
Oh, yeah. I mean, right now where I'm in Colorado, we're at a 420 friendly hotel. And it wasn't even we looked for it. It was just that, and it was advertised and marked. And you saw that their rooms are $10 more, whatever. It's 420 friendly. And you're just thinking, okay, this guy's making some more money. And this guy over here is going to see a way to make more money. And then you have that IoT company that there's not the margin for their product for growing tomatoes, but there is that margin for their product when it's cannabis. So I could see, as people learn a little bit more about the technology, the off plant, and how many things are moving forward there in the ag tech space, people getting more and more interested in it overall, because cannabis, the margins are, at least from the conversations I had, are there in the way that it allows for this other technology to be invested in to grow, because the margins are big enough, and then that technology can still be implemented in other areas. And ad tech is huge. There's going to be a lot of investment in that, in my opinion, overseas, especially in the coming year. I'm not sure how familiar you've been with all the news of the floods and everything that's happening in China right now, but there's going to be a huge demand for overseas products being imported. And I mean, with less people being able to work close in the fields, and that there's going to have to be more technology implemented to increase yield of these farms. And so I could see a big bump in tech in that area. And maybe some of that is just non-plant cannabis tech being implemented now in more standard agriculture settings.
When you say cannabis tech, are you talking about like LED lights that can be tuned to grow the plants at different rates and other things, or what exactly are you referring to?
So more focused on the off plants, such as the IoT sensors for monitoring soil, monitoring the temperature growth of the plants. There's a company that came to me not too long ago that had IoT devices that originally were going to be used for tomato growing, but they found the margins were better for cannabis. But as they're rolling out there, they're also going to implement it in tomatoes, potatoes, a lot of these night growth plants, I guess you'd call it. But there's been technology I've seen lately for even harvesting plants, for plucking them, for storage, for just a lot of increase in the way that to make more yield in these plants, to monitor it with technology using computer vision to see the growth of the plants. Can also, the entrepreneurs, as they give their pitch, this is used for cannabis, it makes a ton of money, but it can also be used for these other plants as well. And so that's what I mean by not so much the LED lights, more the drones that monitor the fields, the computer vision that monitors the individual plants and the development, the IoT sensors for the soil, the water, the absorption of the nutrients, the quality of the soil, and all that. And even the supply chain of it being tracked, because cannabis has to be from seed to, seed to sale. the whole thing has to be tracked with IoT devices or on the blockchain, that just so the government can monitor everything. Well, that same technology can be used for livestock, can be used for apples, oranges, anything else. So there is a lot of crossover that I think is interesting. And I mean, that's just a huge market when cannabis becomes legal and all these states and more money gets pushed in, more inventions, more patents, more entrepreneurs will be more involved in ag tech, and we're going to get more production per person, supply more of the world's food, which going back to China's flooding right now, they're going to be needing quite a bit this next year, at least according to the news that I've seen.
So what I hear you saying is that cannabis has such high margins and such a strong growth rate that entrepreneurs will develop tools for cannabis, but then they'll be used by anybody in ag tech as far as oranges, grapefruits, or whatever, where they can adapt it because the technology is already developed. And so cannabis is leading the way by funding the support of automating and monitoring these fields and harvests. So that's an interesting concept.
Yeah, the money needed for the R&D to create this will come from the investors wanting to put it in cannabis related tech, but then that tech can then be modified, altered, or just repurposed for other types of ag. I mean, not all of it, but that is something I've already seen so far, but I've just seen a little bit with sensors and that, but I have a feeling there's going to be quite a bit more in the future.
So cannabis-driven ag tech policy seems like what we're going to be getting here pretty soon, which makes sense. You go where the money is. If that's where the money, then they're the ones that are going to be putting it into place. But then it can be repurposed for other things. You see a lot of deals out there now where they're doing data analytics. They're monitoring a set of fields through a drone flying over, and then they sell the data coming from it. And there's a lot of that going on. Cannabis, I think, would probably have a similar push in there as having its own data sets to capture and sell, because you're required to provide that for sure.
Oh yeah. And I mean, one company I had a conversation with, they're monitoring cows. So right now cows are being tagged, but I guess those tags fall off, cows get lost or whatever, but they're using drones and computer vision, and through the spot pattern on cows are actually able to monitor all the cows' growth. So they're able to give them nutrients at the exact time that they need them. They're able to make sure that they're milked the exact time, and they're actually all tracked. And that's drone technology with computer vision mixed together with AI. And now it's being implemented in farms. So, I mean, just stuff like that. It's kind of crazy how stuff from one field gets moved to another. And yeah, we see it being used.
Well, I saw an application like that a few years ago. It was called Cattle Watch, and they were using drones to track cattle, and they put a necklace on it that had a certain reader, and the drone could pick up what that reader it indicated what the idea of that cow was. And at first I thought it was for cattle rustling, people stealing a cow and putting a car and driving down the highway. But just as you said, it was really about trying to pick out which one needs which medicine or food at which time. And when you have 500 head out there, you don't want to be running around trying to find number 235. You want to be able to have the drone just tell him 235 is right here. And then you go over and you can start applying the medicine or what have you. So it was for mostly medical monitoring is what they were doing with it. And the drone was an ideal solution because it would go to a certain height and be able to see everything. And as the cattle moved around, you could track where they went. So I guess we're going to see a lot more of that. So it sounds like there's a good application there as well. So the other topic I wanted to get into was ed tech. And we're seeing a lot of interest in the ed tech space. The university model is being disrupted. K-12 is difficult to do because not everybody's online and so forth. Where do you think it's going with ed tech as far as what do you think we should work to solve that problem of getting to the next generation of educational technology, but at the same time making it available for everyone?
That's a great question. I think the last 5-10 years, I've always questioned the value of a university degree versus a 15-week coding program. Because I'm seeing the people that graduate those being more employed and have a higher income than people even with an Ivy League degree. It's quite incredible. You got, your 12-week UX UI program, you're employed, you have your philosophy major, Harvard, Stanford, you're serving coffee to that person in the 12-week program. It's kind of hilarious. And then, I mean, I've seen a lot of people overseas try to come to Silicon Valley and go to these universities to get partnerships or some type of accreditation to do programs overseas. And those have been rejected up until now. We're now actually seeing some open conversation with universities here that have accreditation, that are more open to doing a remote campus, that are more open to having those overseas students, because I mean, they see the model changing. They see that they're not going to have as many people physically in the classroom. It's going to be virtual, but at the same time, that's more revenue for them. It just makes more sense, because at least for me, I'm not in the university system. I don't know, but I was always questioning why these universities that have such a huge brand don't expand more. And yes, office buildings are costly. Land is costly. Faculty is costly. I mean, all these things are expensive costs that they have to raise millions and millions in bonds to do. Whereas now just taking their already small online course and expanding it, it limits a lot of those costs, but the revenue's there. I'm seeing at all different levels. I think a lot of education. I mean, God, my wife right now is doing a virtual MBA program in Singapore. How crazy is that? And we were supposed to be there for her program, but because of COVID, now everything's online. Half the peers in her class are from China, Japan, Korea. They're all over the world. Yes, her classes are midnight to 4 a.m. every day US time, so it's a little tough, but it's the same experience as if we were physically there, more or less. And I just see this as huge opportunities moving forward, where people are maybe realizing that network that they got in the universities before, they can get a lot of that now through LinkedIn, through Facebook, through Twitter. They can build their network, and for the cost in that, the online virtual platform is a way to go. And I think companies are more open to accepting that. And once they're open to accepting that, and I mean, they're even doing their own programs. I mean, Google launched their own program. LinkedIn has had these special training programs for a while. There's a lot of companies that have had these. Salesforce, do this training program, get this certification, we give you a job. And people have not taken full advantage of that because they go, okay, I need to get a college degree, I need to do this. But if they actually researched, found out that, wait, these alternatives are out there, I can get a great paying job in a short amount of time, not 4 years, but 3 to 6 months of focused training in this area. And then every year or two, update my skills, doing a refresher course or learning the new thing that this company or these other companies are looking for. I don't rack up the debt. I don't use the time. I'm flexible with the location I'm working. This is just a better win for me overall. I do see people with younger kids having problems with the school being online. At our location right now, many of the companies have left, but a lot of the people we have gotten are people that work at Google or someplace that are working at home that tore their hair out because their kids are distracting them all day long. So they need to get out of the house. There was a startup that presented us a week ago about having online caretakers for families that kids are taking virtual classes. So it's like a virtual nanny monitoring the kid while they're taking their class virtually. It could be something, who knows? There's even a startup with training courses for, as before it was at work productivity to monitor. Now it's at home productivity to monitor, and courses on how to improve at home productivity, whether that's at your company or online studying. So I think that the world is seeing that even if COVID goes away tomorrow, that the future might be virtual, especially with virtual reality becoming more and more prominent. Companies realizing they can get investment and get deals done without sending someone business class to a 4-star restaurant or hotel across the world. Just all these expenses, they're looking at their bottom line going, how can we get rid of these? Virtual is the answer. Schools, I think schools the same way. There's a lot out there. I think ed tech is going to be huge. I see a lot of companies going in that direction. I see a lot of investors asking questions about it, both VCs and angels. A lot of angels are asking questions about that. And not just US. Contacts we've had in China have reached out to us for introductions to US ed tech companies because they're interested in taking their courses, their IP or whatever they already have developed here and seeing about implementing it overseas for students there wanting that U.S. education, wanting that English taught education, which is interesting. I mean, if you can create, I mean, there is that demand everywhere in the world for that Western education, that U.S. standard. And now it's a possibility with these courses being online where if a school is open to it, you could have that student in the Philippines take that class based in Mountain View. It's a possibility. They just have to be open to that conversation, and that wasn't there before.
Yeah, it seemed like big tech is very well positioned to make a big move into the ed tech market. We had a big disruption with the COVID pandemic. At the university level, costs kept going up, but not job placement or productivity in many ways. And so they're in many ways way overpriced for what they're offering. And much of what they were offering was campus lifestyle, not education. And it just seems like there's a shift to continuous learning, lifelong learning, not just come for 4 years, pay a big price, and that's it, it's over. You pay a little bit every year for the next 50 years, and you can come back and get new education and new training because things are moving so fast. There's no way a 4-year college degree will prepare you for the next 20 years. They're doing good if they can prepare you for the next 5. And so I think we're going to see a big shift. And I bet somebody in the big tech world leads the way with continuous training, ongoing training, lifelong learning training. And if it has that magic recurring revenue behind it, there's no shortage of people signing up to be a part of that and make a business to sustain that in the marketplace. So I'm interested to see what startups come out with ideas in that direction. You mentioned several already, like Google, that have programs, and a lot of those programs are very specific to coding and specific technical things that they're part of. But what about other aspects like nursing or pre-med or chemistry or those type of things? How will those get online and in a way that you can actually turn it into an ongoing, continuous, lifelong learning program that you can continue to charge for it too? They stay in your program for many, many years that way. So I'm looking for that switch when it comes, because clearly the model has gotten to the point where it's just not working anymore. And the COVID has really shaken it to the point where people are now making different decisions, it seems like. Which tech company you think might win that race?
I don't want to name any specific names. I'll stay away from that because I'm 100% wrong no matter what I pick. But I think I think this is just a great time for innovation. As bad as that might sound, as bad as people might not want to hear it, a lot of the great companies that we talk about now came out of the Great Recession, 2008, 2009, or 7, 9. And I see the same way with companies right now, really sitting down thinking, okay, what does the market need? What can we provide? I see companies that have raised money now buckling down and actually saying, okay, we got to really use this to its fullest. You see people already, even if they have a job, thinking, okay, I need to start my side hustle right now because my job, who knows how long it's going to be there. You hear people going, okay, I'm going to do, you just see more urgency, at least from the people I've talked to, of wanting to prepare themselves for the future and try new things, try to get their company sound, get what they're working on out there. I'm just going to vote on tech.
Well, great. Well, appreciate you taking time to share your thoughts with us today and what you're doing. In the last few minutes that we have here, what else should we cover that we haven't?
I mean, I think we covered a lot. Some other things that might be really interested is the change of what I'm kind of seeing in networking, whereas pitch events are now all going virtual online. The opportunities for entrepreneurs anywhere in the world to get access to angels and VCs in other locations, I think is more open now than probably ever before. You don't have to fly these places. Accelerator programs, a lot that were in person are now going virtual. There's a lot of interaction between angel groups, at least I'm noticing more now overseas, for example, Europe and Silicon Valley, because if everything's virtual, the idea of having an office needed within driving distance of the investor is at least hasn't been brought up as much. So what would be really interesting to talk about a little bit more is just the change in the early stage, seed stage angel access that is happening right now that I know for a fact some people are taking a lot of advantage of, but I think also some people out there are not as aware of it as they could be.
Yeah, I see some investors say, well, I really want to meet the people face to face. But in the argument I hear from those guys is that you pick up a lot of cues, visual cues, body language, and so forth when you're in the same room that you don't get through Zoom. So Zoom screens out some of the information you'd want to get. You kind of see the head and you can hear what they're saying, but you don't really spend too much time with them in these half-hour, 1 hour Zoom calls. So you're missing a little bit of information there. Having said that, given the amount of money people are putting in at the seed stage, it keeps going down because investors are spreading the money across more deals. It seems like it hits a threshold point where it's below X dollars. I'll just do it on Zoom. No problem. I don't need to fly anywhere, meet people, or what have you. I just make my bets and see where it goes from there. And on the company side, I get the impression a lot of investors or a lot of startups think that investors are not investing in the pandemic. They say, well, they're just not doing it. And what I found so far in the pandemic is that in the first 4 weeks, the investors were heads down taking care of their portfolio. So they were just doing that, getting them PPP money and following them up and triaging those who are going to make it, versus those who are not. But then after that, they were all back to business like they always were. And so because a lot of the really early stage startups were not in the market, there were fewer deals out there for about 3 or 4 months. There weren't as many people. And some people were just distracted by the pandemic. They have to go take care of family and other things, so they can't get out. But so there was fewer deals, but the ones that were out there were really good quality deals. And I saw a lot of deals get funded in the pandemic itself. As we go forward, if this stays with virtual, I think it'll increase the productivity and the amount of deal flow that actually gets done because it's so much more efficient. What used to be an hour meeting is now a half-hour meeting online. And so you get an automatic doubling of your productivity because you're now doing it online. There's not a lot of chit chat, no driving, no commuting, and all that going on as well. So I think it'd be interesting to see that at some point in the early stage that if you're below a certain threshold, like crowdfunding, for example, average investment I saw when I was doing it was $2,500. And I know a lot of people can do it for less. When it's at that level, it's just online. If it's above a certain threshold, well, then you need to go meet people face to face. So I think it's going to be a big boost to the early stage funding. I know the crowdfunding portals out there, Title III, saw a 50% increase in activity over the COVID pandemic because they were online. You didn't have to go anywhere. And so it facilitated that. And maybe we'll see that thing rise to the 25K, 50K, or 100K level, that if you're below this number, but you're at that level, we'll just do it on Zoom and take care of it that way. What's your take on that?
No, I mean, I would definitely agree, especially as this goes longer and longer, because VCs, they all have their investment thesis, their mandate where they have to deploy a certain amount of capital in a certain amount of time. They got the deployment, the growth, the harvest. And if they want to raise fund 2, fund 3, fund 4, they have to deploy all the money in fund 1. So while at the beginning they were kind of hesitant what's going on, now they're thinking, I got to spend this money. I got to push it forward. And angel investors, a lot of them are very similar. They have their, 10% of my net worth, I'm going to do an alternative investment. Okay, I'm going to make 3 investments into angel companies every year. Or a lot of them, you've worked with engineers before. They have it penciled out exactly, what their plans are. And they plan on following that. And, as we're getting closer to the end of the year, you're probably going to see some people making, writing more checks to follow their game plan. Family offices, same way. So I think that, there is pressure mounting because some people didn't invest earlier this year. There's going to be more pressure later this year to deploy capital. Startups, same way. At the beginning, they were hesitant what's going on. So they really hunkered down, tried to not spend anything, but now realize, hey, if we're going to grow in this market, we have to spend. Okay, let's get out there. And there's going to be a lot more deals, I think, going on just through virtual online, mainly because of pressure, because of time commitments, and then also because it's becoming more of a norm.
Yeah, I think people become more used to it as well. They'll just get more comfortable with the idea of talking to somebody online and doing it that way, and makes it more efficient. Well, appreciate you joining us today. How best for listeners to get back in touch with you?
So the best way to get in touch with me, follow my podcast, the Silicon Valley Podcast. Hall Martin was a guest on my podcast, and I got great reviews. So if you want to find out about my podcast, listen to his episode. I think it was number 3 or 4. And then follow me on social media. All my links are Shawn, SHAWN, Flynn, FLYNN, That's Twitter, Facebook, everything. Shawn Flynn SV. And connect with me on LinkedIn. And I got to thank Hall. I got to thank you one more time for allowing me to be on your show today. I had a lot of fun.
Great. Thanks for joining us and looking forward to the next one.
All right. Thank you.
Thanks.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org.
Hall T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinions of Investor Connect. This podcast is for informational purposes only and should not be relied upon for the basis of investment decisions.